The following presentation is brought to you as a courtesy from Forex Academy. This is part of our service Advanced Technical Analysis course. If you find it interesting and wish to be updated on new releases, please subscribe to our YouTube channel or join our community at forex.academy and receive all our services for free. Your like is also highly appreciated. Enjoy.
So let's start with looking to incorporate technical analysis into a solid trading plan. So what we're effectively talking about and something to be aware of is that predicting the future is a very, very difficult challenge. And some, certainly those that really struggle to see consistent returns, some actually may say it's actually outright impossible to do so. Now, those that are profitable would, of course, and consistently profitable at that, would obviously say that that's not the case. So decide which tools that actually suit your own personality as well as a very important consideration when looking to build a trading strategy or a solid trading plan. Because we've all got different personality types, it's important to know what type of tools best suit your personality in terms of application. So for example, you could ask yourself, do I use moving averages? Bearing in mind all of these tools may have pros and cons. What period should I use on a RSI, for example? A relative strength indicator. So there's a myriad of questions you'd need to ask yourself, and really you want things that appeal to you, that make sense, that you can actually derive consistent decisions off the back of these tools. And it's about convergence. It's about making sure that you have the tools that you need to basically do and conduct yourself in a very consistent, disciplined and kind of a patient manner as well. So don't simply choose one tool or technique and believe that is it. That's often what is perpetuated, that this is the holy grail of trading these markets. In actual fact, what it may do is contribute to an overall profitable performance and strategy. However, there's the kind of the concept of I suppose the holy grail approach to trading doesn't really exist for those that are consistently profitable. So there's things that a profitable trader will do well on a number of occasions, and they'll keep doing what works for them, and then they get better and better at that particular style and methodology. So it's really about building a set of tools that really fit you, your lifestyle, your personality type, and obviously people are a lot more comfortable trading these environments if they've got tools that they can almost rely upon, and therein lies the key to make sure you kind of work with the tools that you're most comfortable working with. Now, determining the balance of probabilities absolutely lie in your success. It's easy to get involved in the markets and to pick up from a third party that this is the approach that will make you a lot of money. You've got to be very dubious of statements and I suppose principles like this. Now, when we all trade, we trade on probabilities. There is a likely probability of a successful outcome if I do X, Y, and Z, and it's really practicing X, Y, and Z in a consistent manner that will determine your success. And sometimes it is a case of perhaps working with a tool that you find no longer provides you with the confidence that you need to execute your trade plan, and therein lies some of the difficulties that some traders can take. Now, it's important with any solid trading plan to really focus on risk management. So risk management for us is absolutely key. Let's apply some of the tools we've looked at this week now to sort of show you, I guess, the best way to look to apply some of these principles. So let's start with price observation. and simply identifying a trend. Now, if I asked you to just visually look at the chart currently up on screen, it just happens to be the dollar index, and you know, can you identify just from a visual perspective what direction this market is currently moving in? So if we're looking to apply an observation on a trend, you know, what direction is this market moving? So while you just consider that, I'm going to just very quickly get up my pen. And don't forget, when we talk about identifying a trend, an uptrend is a series of higher highs and higher lows, and a downtrend is a series of lower lows and lower highs. So when we look at this chart, certainly from this period of time here to this period of time here, you can see price action moving from top left to bottom right. And what we're seeing is a series of lower highs and lower lows on the way down, which we can identify very, very cleanly. And so I can only assume that you're looking at this chart and you're seeing these lower lows, very distinct, easy to identify. And I hope you would agree that without a shadow of a doubt, we are in a downtrend, and we have been for the best part of 16 months actually in the dollar index. And we're going to look at the dollar index in a lot more detail very, very shortly. But it has all of the ingredients necessary to be a trend, firstly, and then it's up to you as a trader to be able to identify what direction that trend is moving in. And sometimes it's just price observation. So you don't need to have any particular tool to tell you that this market is moving to the downside, although we'll be looking to apply certain tools that will make that decision just crystal clear if you were having any issues. And what it will also do as well is identify areas within that trend that you know, might cause you a little bit of a time, let's say, to pause and to just see what's going to happen with this market, and you know, what plan of action should you take to address current market conditions. And this is one of the reasons why we're going to look at the dollar index in a lot more detail, because it encompasses quite a lot. If you are familiar with sort of recent price action in the US dollar, you'll probably be aware we're getting a bit of dollar strength coming into this trend, which has been for the last 16 months to the downside. So you know, there's definitely times and opportunities. Trends, you know, do not last forever. You know, they come a time where they max, so they reach a high or a low, and then you often get a prolonged period of consolidation at those highs and lows, and then you either get a continuation in the direction, in this case to the downside, or you get a reversal to the upside. So it gives us some fantastic opportunities as a trader to identify, to just apply price observation and come to some very, very easy and straightforward conclusions. So price is full of information. You know, a simple observation tells you a lot. Prices are moving to the downside. So if you adopted over the last 16 months an approach which was looking to sell this market because of that price observation, then you would have had a higher probability over the last 16 months of making some significant returns on the dollar index. So let's ask ourselves a series of questions. You know, is there a trend? We can clearly see from the chart currently up on screen over a significant period of time, yes, there absolutely is a trend. So we can almost all agree, and this is the thing, we can all absolutely agree that price action has been moving to the downside at a tremendous rate. So if that's the case, what is the direction of the trend? So we can clearly identify that without a shadow of a doubt, it is to the downside. So now we're beginning to build kind of a little bit of a picture. So start your directional analysis from the answers you've provided above. So if we know, yes, we are in a trend, yes, the direction of that trend is to the downside, then you can apply a little bit of logic, excuse me, let me take that back, a little bit of logic that are rest in the assurance that the trend is very much your friend. What you are doing if you're trading a trend is you are going with the market as opposed to going against it. So you're not looking for opportunities to buy this market in a downtrend. That is a strategy for more probably, let's say, experienced traders firstly, but secondly, the chances of a successful outcome are actually somewhat reduced. So it's not to say that you can't make money on buying these markets at very select opportunities. Of course you can, but what you want to do is to try and trade in line with the rest of the market. And in this occasion, up till the sort of more recent price action, that decision has very much been to the downside. And it is important to remember that the trend absolutely is your friend. We can firmly identify, working with the same market, that this is the dollar index. And to just kind of review it, and it's just highlighting in a little bit more detail that we can absolutely identify resistance, and that is what is important in a downtrend. So the definition of a downtrend is a sequence of lower lows and lower highs, and the lower highs are represented and by these little blue lines currently up on screen, and they're actually very, very important because they're key resistance levels. So these are the highs that really prevent this market from moving higher. So you can use any one of these, and if you sell this market, you could place very consistently your stop loss above any one of these levels, and as you can see, you would have only been able to have made profit. Potentially, if you held on to this trade down here, you would have seen a structural failure back to the upside. So it's not to say you're guaranteed a profitable outcome. Like, you would have seen a profitable outcome for a prolonged period of time, so you're very likely to make profit on that trade. But as you can see, that we did for a short period of time see a little bit of a bullish move in the dollar index around October of last year before the price actually rolled over again to the downside. So key resistance levels are very, very important when we're talking about a downtrend. So the trend is down. Identify resistance points, which we can identify with these blue lines. A downtrend is defined through its resistance levels. So it's a series of lower highs. Allows us to define it as a trend. Now, trade with the trend is a very high probability approach, and that means I will look to sell as long as key resistance remains intact, and it does on nearly every single occasion, pushing prices lower. And you have to determine your directional bias. So that's a basic principle that needs to be applied to every type of trading strategy, where whatever decisions you come to, deciding what to trade and what direction to trade it are very, very important, and that will determine how much money and return you can see trading these markets. So you need to be able to select the relevant market for a certain set of reasons, and then you need to be able to be very confident in that decision making to actually say, right, well, I'm looking to buy this market or I'm looking to sell it, and to not do what a lot of new and inexperienced traders do when they certainly enter this environment, is chop and change. So 1 minute they're selling, 1 minute they're buying. They don't really have control over the market. The market is very much in control of them, and they're making decisions based on probably very erratic price action, with price moves bouncing higher and lower. So they can get caught up in that. So being able to observe a trend, being able to identify or to be able to identify it with a very, very basic methodology to identify a downtrend. So as long as we see a series of lower highs and lower lows, then we know we are in a downtrend at that point.